Florida is pulling $2 billion worth of state investments managed by BlackRock over its commitment to a woke agenda and ESG funding.
We're going into the proxy season now. Do you anticipate backing any of those ESG?
So we're almost done with proxy season. In fact, in the U.S. we're done. And we still have a few more in Japan. Past year, we had $400 billion of net inflows in long-term assets, of which $230 billion came from the United States.
350 financial groups, including BlackRock and UBS, banned from doing business with the state.
I think we have more engagement with more clients than ever before. Some of that engagement is on ESG issues.
In the last 10 months, Larry Fink, BlackRock's CEO, has sold 17% of his stake in the company. This is a huge sell-off, and it suggests that Fink knows something that we don't. Whatever the reason for Fink's sell-off, it's clear that BlackRock is in trouble. The company's first quarter earnings fell 18% year on year, and its assets under management are declining. If BlackRock continues to lose money, it could trigger a bank run. Investors would rush to pull their money out of the company, crashing the share price and stripping it of its power. This is a major development, and it has the potential to destabilize the entire global financial system. Hello, and welcome back to Serious Coinage. In this video, we'll explain why BlackRock is collapsing, what it means for the economy, and what you can do to protect your money. By now, we all have heard about BlackRock. It is the most powerful firm in the world, controlling assets worth nearly $10 trillion, or roughly 8% of the global GDP. Its influence, however, goes far beyond its monetary value. For years, they have remained in the shadows, plotting and controlling the world with little opposition to their vile plan. They sit in unelected posts such as National Economic Council Chief and Deputy Treasury Secretary to create optimal market circumstances in which they prosper while everyone else suffers. The world can now see BlackRock's intervening hands exposed for the fraud that they are. Pressure is slowly being exerted due to increased scrutiny from investors and uncorrupted political forces. The BlackRock beast is having its lifeblood slowly sucked out of it. BlackRock's activities. BlackRock was able to capitalize tremendously on the financial crisis of 2008. For many failing financial institutions, it ensured an unopposed deal for control. This bolstered Larry Fink's already considerable influence, plus an open channel of communication with the U.S. government. In 2020, when the shutdowns were only beginning, the government enlisted BlackRock to shield the Federal Reserve from financial consequences. These periods of economic uncertainty were critical to BlackRock's climb to prominence. As the saying goes, with great power comes great responsibility, and BlackRock would like you to believe that they are taking responsibility. BlackRock issued a statement in the summer of 2020 when the world was still reeling from the tragic passing of George Floyd, stating that businesses needed to have a social mission and that the firm would be assigning an ESG, environmental, social, and governance score to each company. In addition to offering environmentally friendly policies and technologies, firms that pledged to hire and lead with greater diversity were awarded better scores. In 2020, BlackRock emerged as the most vocal proponent of ESG investment, although the idea dates back to 2004. In all candor, it was successful. Prior to this announcement, ESGs were discussed in less than 1% of earnings calls. This percentage increased to nearly 20% by May of 2021, and it has been the fastest growing segment of the asset management business ever since. These days, consumers care more than ever about a company's effect on the world around it. Isn't this a good thing? Companies that care about society do better. If only it were the case. But it's obvious to everyone that the world we live in isn't perfect. BlackRock's ESG statement has been an increase in corporations engaging in techniques like greenwashing, in which they falsely claim to be more environmentally friendly, inclusive, or socially responsible than they actually are. It has also shown how hypocritical BlackRock is. It is the largest investor in fossil fuels and war profiteering and has a relatively friendly connection with human rights violators, despite the fact that the corporation purports to support ESG investment. And it's not just BlackRock. Vanguard, the world's largest independent asset manager, also uses this method. Although they advocate for ESG investment, they continue to put money into oil and gas corporations with dubious human rights records. We frequently observe this from BlackRock. In the eyes of the general public, they take actions that appear to be in the correct direction, but in reality, they are hesitant to change their investments, even if doing so would benefit society as a whole. Let's look at climate change as an example. Climate risk is investment risk, says BlackRock. This means that investing in companies that aren't making plans to help deal with climate change is a risky move. BlackRock acted in 2021 by helping to reshape ExxonMobil's board of directors with new members who pledged to combat climate change. The oil and gas giant were formerly accountable for 2% of global emissions. Without a question, this is a brilliant move by the firm. However, the fact that it remains the largest investor in fossil fuels in the world makes this seem more like virtue signaling than a serious attempt to bring about change. The hypocrisy continues after that. BlackRock has come out against gun violence, demanding that manufacturers do more to ensure the safety of its customers in the wake of continuing mass shootings in the United States. Who, though, is the biggest backer of gun companies? You guessed correctly, BlackRock. BlackRock has a considerable number of stakes in major arms manufacturers. The investment company owns a 16% share of Sturm Ruger, a 15% share of Vista Outdoor, and a lot of other similar makers. BlackRock says it talks to these companies about how to improve safety, but it's not clear if any policy changes have happened yet. BlackRock's U.S. Aerospace and Defense Fund invests billions of dollars in large international arms manufacturers, including Lockheed Martin, Raytheon, and General Dynamics outside the United States. They back corporations that profit from the Pentagon's massive contracts to fund their global campaign of terror and war. The peace motive is often used while selling these weapons to other nations, like Saudi Arabia, which launched indiscriminate attacks on people in Yemen during the country's protracted civil conflict. BlackRock's continued funding of the expansion of the conflict and the buildup of nuclear weapons demonstrates the company's consistent disregard for human rights. And so does its cooperation with totalitarian regimes. BlackRock is the first global asset management to get access to China's mutual fund, prompting opponents to ask what, if anything, BlackRock CEO Larry Fink promised Chinese President Xi Jinping in exchange for granting him access to the Chinese Communist Party's money. BlackRock isn't the only investment firm interested in China, to be honest. Its vast influence, however, has made it the most effective in establishing a presence in the contentious region, which is even more remarkable given that it is a U.S. firm. The $10 trillion BlackRock crash has begun. Larry Fink has divested himself of 17% of the company during the past 10 months, as evidenced by his trading activities. Fink reportedly sold 41,000 shares over 4 transactions on November 22nd for a total of around $27 million and a 10% reduction in his position in the company, as disclosed in SEC filings. After that, in April, Fink sold 7% of his shares in the company in 3 separate transactions, earning him $25 million. But, of course, Fink would prefer it if nobody paid attention to this. What other reason could there be for him to sell such a huge chunk of his shares in so many separate transactions, spaced only a few quarters apart? Perhaps one of his former executives, Brian Deese, who now heads the National Economic Council, gave him advance warning that the United States government plans to revert the definition of a recession back to normal, as he had previously changed it so that Biden could claim all is fine and dandy. Alternatively, BlackRock's first quarter reported earnings for 2023, which fell 18% year on year, may be a bigger issue than claimed by the firm, which cited the impact of significant market volatility. Investors will certainly get suspicious if revenue drops for a 6th or 7th consecutive quarter. Despite Fink's admission at a conference organized by the New York Times in November that BlackRock would support ESG policies if they were in the best interest of shareholders, the firm now appears to have given up on ESG, which everyone knows is nonsense. BlackRock focuses on sustainability, not because they are environmentalists, but because they are capitalists and fiduciaries to our clients. As shown by the fact that 2 shareholder movements addressing climate concerns received less than 10% support from shareholders at a meeting in January. ESG has primarily been of interest to individuals with a political purpose rather than to shareholders. BlackRock's downfall is causing investors to quickly withdraw their funds, causing a collapse in the stock price and a power vacuum within the corporation. With the threat of a bank run looming, if revenues do not improve, Fink has every incentive to extract maximum value from the company he co-founded and has led since 1988. And this likely explains why he has decided to distance BlackRock from ESG. Thank you for watching, and do not forget to hit the notification bell and subscribe for more.